When it comes to a golden visa, the glossy brochures and beautiful imagery of a sunny foreign locale are designed to make you feel good. But the single most important part of your journey isn't how a brochure looks, it's how you protect your capital. And the best way to do that is to ask the right questions. I offer you these 5 critical questions to ask before you commit a single dollar to a golden visa fund. Question 1. Who's running this fund? This question gets to the heart of manager integrity. You need to ask about the people behind the fund. What's their track record, not just in managing money, but in successfully exiting funds and returning capital to investors? In the context of Portugal's Golden Visa program, where most of the current funds are too young to have exited, you'll need to look for a track record with retail investors beyond the Golden Visa context. Question 2. Does this investment have a clear exit strategy? This question is about managing liquidity risk, as I covered in my videos, the Golden Visa exit strategy, getting your money back, and how to manage Golden Visa liquidity risk. Many funds have a fixed lifespan of 6 to 10 years, and early redemption is often impossible. You need to scrutinize the fund's exit plan and ask if there are already letters of intent from buyers. Without a plausible, verifiable exit plan, your capital could be locked up in a risky, illiquid asset. Question 3. Are you, the investor, willing to pay income tax on phantom fund gains? This question is about U.S. tax implications. Every Golden Visa fund is likely to be considered a passive foreign investment company, or PFIC, in the eyes of the U.S. IRS. If you elect a tax treatment to avoid punitive rates, you may be required to pay tax on the fund's gain in value each year, even if the fund hasn't distributed any cash to you. This is a significant financial obligation that you must budget for. My video, U.S. Tax Implications of a Golden Visa, goes into more detail on how these tax overlays work. Question 4. Who is really holding my money? This question is about fund unit custody. In Portugal, your investment is registered as a digital unit. You need to ask and decide whether those units will be held in a personal account in your name or in an omnibus account by the fund manager. This distinction has a direct impact on transparency, fees, and ownership risk, a topic we cover in depth in my video, Understanding Fund Custody. Question 5. If the program was terminated tomorrow, would I still make this investment? This final question is about economic rationale. It forces you to look past the promise of a passport and ask if the fund is a sound investment on its own merits. As we've seen with programs in Spain and Ireland, political and legislative risk is real. A fund with a durable, viable business model is a safer choice than one that exists only to capture foreign capital. These 5 questions are the starting point for a rigorous due diligence process. They are the keys to a clear-eyed understanding of the risks you are taking. For a full education on how to find the answers to these questions and the tools to uncover risk, I welcome you to join the Don't Get Burned Golden Visa Risk Masterclass. And for a downloadable PDF that summarizes the 5 pillars framework from my video on the Due Diligence Checklist for any Golden Visa investment fund, click the link in the description.